Hey guys, today we're going to do chapter 20, which is job order cost accounting. This one is going to be job specific. The second chapter of cost accounting will be chapter 21, and that will be process cost accounting. And that is more like an assembly line type cost. So we're going to start on chapter 20. Some just general basic information about what cost accounting is. Cost accounting is the measuring, recording, and reporting of product costs that allow computations of both the unit cost of each product and the total cost. So we're going to calculate out how much each unit is, as well as its total cost for the company. Cost accounting system is a system that consists of manufacturing cost accounts that are integrated into the general ledger. So we're going to talk about some new general ledger accounts. The perpetual inventory system is used so that up-to-date information on the cost of a product is going to be provided at all times. There are basically, like I said, two types, and you need to know these two types for the test. The first one is job order cost system. This one, the costs are assigned to each job or each batch of jobs of a job. That is the subject of this chapter, chapter 20. Know for the test that each job will have its own special characteristics. You can see an example on page 4, illustration 2. You are looking here for a particular job. So you've got the computer programmers, the musical composers, voiceover talent, animation talent. Each job has its specific distinguishing characteristics. That would be for an animation theme or an animated theme film, and then the other one is an action thriller. You would have the actors, the stunt people, the set design, the food caterers, stunt persons, insurance, location fees, those types of things. Each thing has its own special characteristic. The way I like to think of it, it would be like menus or invitations of some sort. So on a menu, you might produce batches of menus as a printing company, but each menu will be different. You can't give Applebee's Bob Evans menus or vice versa. Each job has its own characteristics. Bob Evans needs Bob Evans menus and Applebee's needs Applebee's menus. So you would be able to take that particular job and that particular job, and you will know that they're two separate jobs. Now, the second one is process cost system. And that is going to be used when a series of connected manufacturing processes or department produces a large volume of similar products. So when we sat at our tables in the campus, in those chairs, I could take all of those chairs out of that room and put them in the hallway. Unless you had marked your chair before I took your chair, you wouldn't be able to pick your chair out of that whole batch that's in the hallway. That's the type of thing we're talking about here. You're going to produce mass quantities of items that are going to look the same. So there's really no distinguishing thing about them. It's just they're all the same. Know for the test that process cost is a production of large volumes of similar products. So what I just said there, you do need to know for the test. This is the subject of the next chapter, and it accumulates cost over a period of time. So the process itself never stops. It just accumulates costs as they go, and at the end, you're going to have to kind of stop the production in your head and get a count. The problem with the process cost accounting is everything is at different stages in the process. You've got the pieces, parts, and then you've got the stuff that's on the conveyor belt that at the beginning of the conveyor belt, it's still mainly pieces, but the further you get down that conveyor belt, the more closer it looks to the final product. And at some point, you have to mush all those things together and get an idea of how many we would really have here completed units if we mushed them all together and made complete units with it. So that's the subject of the next chapter. Either way, the objective of both is to provide product unit cost information for product pricing, cost control, inventory valuation, and financial statement preparation. Companies can use both job order and process costs, but it just depends on how their manufacturing process is set up. So let's take a look at the job order cost system, starting on page 6. The flow of the costs is going to parallel the flow of the materials as they're converted from pieces parts or raw materials into the finished good at the end of the process. Manufacturing costs are going to be accumulated in a new account called Work in Process, or WIP, W-I-P. When completed, then the work will be assigned to another inventory account called Finished Goods. Then when they're sold, the cost of the job becomes cost of goods sold, just like it is when we sell our inventory. When we get it in as a merchandiser, we put it on the shelf, we sell it. With a perpetual inventory, we had 2 journal entries to record. It'll be the same with this, 2 journal entries to record the sale, one at the selling price, one at the cost price. Know for the test that the flow of cost involves accumulating the manufacturing costs incurred and assigning those costs to the work that is done. We're going to work through the example on in the book here, starting on page 6. To illustrate, assume that Wallace purchases on account 2,000 lithium batteries at $5 per unit. That would be $10,000 worth, and 800 electronic modules at $40 per unit, or $32,000, for a total cost of $42,000. Now, you're going to have 3 different inventory accounts. The first one will be your raw materials, the second will be your work in process, and the third one will be your finished goods. So what we're going to do is we're going to start off with, when you get this inventory in its pieces parts, so therefore it's called raw materials. So this would go into your raw materials inventory when you get them in. And usually when you're buying your inventory, just like we did before, it would be accounts payable, who? If you have it. Now these raw materials will go into a stock room or a storeroom, and then they'll be requisitioned out and put into the process, or into the process as not direct costs but indirect costs, and we'll talk about the difference here in a little bit. Let's talk about the factory labor. No for the test as far as raw materials goes. Let's go there first. The cost of the raw materials purchased will go into that raw materials inventory when they're received. So you're going to order them. When you receive them, that's when you're going to do this journal entry up here. The raw materials inventory is a control account. We talked about how accounts receivable is a control account for the accounts receivable subledger. In 101, the same thing with accounts payable for the accounts payable subledger. We worked with those in the practice set. All of your subledger information on the different types of inventory that you have, the pieces parts, when you add them all together, they should equal the amount that's found in raw materials inventory at any given time. So just like it is with the subledger accounts for the accounts payable and accounts receivable, they have to total that control account in the general ledger with that detail that supports it in the back. Subledgers will be kept for individual recordings for each item in raw materials. Like I said, those added up should equal that control account. At this point, no attempt is going to be made to associate a cost with a specific job. We're going to do that through that WIP account. Posting is done to the subledgers daily, just like it was in 101. Okay, let's go ahead and now go on into factory labor. Factory labor is going to consist of gross earnings for factory workers, employers' payroll taxes on the factory workers' earnings, and fringe benefits that are incurred from having employees. Labor costs will then, you're going to debit all of that to factory labor when it's incurred or when it happens. And what we're going to do then is we're going to take that factory labor and assign it to work in process and manufacturing overhead, which you don't really understand yet, but you will in a minute, at the end of the period. So looking in your book, at this point, we know that Wallace is going to incur $32,000 of factory labor costs. Again, that's the gross earnings for the employees. That's any fringe benefits, the employer payroll taxes, all of that stuff is going to go into factory labor. So we're going to set that up as a debit on January 31st to factory labor. And it's $32,000. And we're going to call it, on the credit side, payroll liabilities. Manufacturing overhead, let's talk about what that is. That is going to be the things that we have incurred to date that we typically have expense after. So like utilities, insurance, another one would be for an adjustment would be accumulated depreciation. It may be a tax that you're going to pay later. So like property taxes or, any of those types of things that we used to say expense afterwards, rent, all of those things. All of those, when you incur them, that means you're going to show them on the books and you're going to have to record it during this time period to follow the revenue recognition and the matching principle or the expense recognition principle. So those are the types of things we're going to be looking at when we say the words manufacturing overhead. So those costs will be recorded daily or periodically, and what we'll do is when we incur them, we'll debit manufacturing overhead, which is the control account, and it could be, if we have incurred them and paid them, then we could be crediting cash. But in your book, the example is going to set them up as a payable later for most of them. So in the book, it says that we're going to debit manufacturing overhead and then credit the things that they have incurred. In this case, it's utilities payable, prepaid insurance, accounts payable, not for more inventory, but for repairs, accumulated depreciation, and property taxes payable. So you can see that in the book. I don't want to write all that up there because I am going to be doing some more with this stuff in just a second. So I'm going to back off to the raw materials. So if you just look on page 7, the journal entry is there that you put the credits in and then you total them up and put that amount in to make your debits and credits equal under the manufacturing overhead. You'll be told what has been incurred in your examples and in your test. So at this point, let's take a look at brief exercise 2. So brief exercise 22. On this one, it says during January, its first month of operation, Steiker Company accumulated the following manufacturing costs. We have raw materials purchased $4,000 on account, factory labor incurred $6,000, and factory utilities payable of $2,000. So you're going to take them one entry at a time. We're going to start with the raw materials. So in this case, we have raw materials debit of $4,000, and they were gotten on account, so then accounts payable. The factory labor that was incurred is going to be amount of $6,000. Now in your book in the exercise, it credited payroll liabilities. You can do that, or you can credit factory wages payable. Either one will get you correct points for right now. So we'll go with what the book said, payroll liabilities. And that is for $6,000. You may hear me refer to this credit as factory wages payable because that's what we've always done before this book. So don't be surprised if you don't hear those words again. The only manufacturing overhead that they gave us for this exercise was utilities payable. So we're going to put that into a debit of manufacturing overhead of $2,000 and set the utilities up to be paid later. Okay, so this is basically setting up the three cost components. We have three cost components when we're talking about the cost accounting process. We have raw materials, we have factory labor, and we have manufacturing overhead. So when I talk about the three cost components, that's what it is. Raw materials, factory labor, and manufacturing overhead. Those are the three costs that are going to go into each product that we make. So by keeping them separate, we know how much is going into it for the pieces. We know how much labor has gone into it to put it together, and we know how much general overhead has gone into it to put it together. Those three things added together is going to equal your total cost of your product that's completed at the end. So now what we're going to do is we're going to take these three cost components and we're going to actually assign them to the process. So going back into the chapter, starting on 7 and 8. When we assign our manufacturing costs to work in process, we're going to use something called a job cost sheet. That's on the top of page 8. So each job will have its own job cost sheet. And when the job is completed, then you'll finish this bottom part. So in the meantime, you're going to work on the top part. These are used to record the costs that apply to each specific job. So you'll need to know what that is for the test. What is a job cost sheet? It's the sheet that is going to be used to record the costs that are incurred for each specific job. So notice in the top left, it says job number. You're not going to have multiple numbers there. It's going to be one job number, and these are the costs associated with it. And then when you get down to the right, down to the bottom, you can see that you add those three cost components up, materials, labor, and overhead, and then you divide that by the total number of units that were produced, and you get a unit cost. So this is the whole process in one little piece of paper. It's kind of like your worksheet for your financials. Postings will be made daily to the job cost sheet, and also know for the test that these job cost sheets become the subledger for the work in process account. Remember I told you there are 3 inventory accounts: raw materials, work in process, and finished goods. So the work in process detail is going to be found on the job cost sheets. That's its subledger. WIP is another control account, like raw materials. So work in process is the control account. The job cost sheets are your subs for that. Now, when we're talking about the raw materials, because we're going to put each one of these cost components into the process of the product. We're going to go starting with the top one, raw materials. Know for the test that raw materials costs are assigned to a specific job when the materials are requisitioned from the storeroom. And you do that by what we call a materials requisition slip. You can see an example on page 9 there. They fill this slip out, they take it to the storeroom, and the storeroom fills that request. And then they take their product back out to the floor and start putting it into the process. These forms are going to indicate what quantity, what type of materials have been taken out, and the account to be debited. So if you take a look at it, you have got, it's going to the assembly department. It tells you what job number it's going to go to. It tells you how many you're getting, what it is you're getting, how much its cost is, and what its total is. So you've got that materials information to put on that job cost sheet at that point. And that will tell you where you're going to go with it. If it's direct materials, it will go into the product. That's when I explain the difference between direct and indirect. All direct materials and all direct labor means that direct means that it's going right into the product. They're actually pieces, parts that are going to become part of the finished goods. They're actually people that are working on putting that product together. It's not just somebody who's pushing a broom. That would be the indirect side. It's not just oil that you need to put into the machines in order to make them work or service the machines. That would be indirect materials. So that's the difference between the direct and the indirect. The direct goes right into the product or is being worked on into the product. It's going to go right on that cost sheet. Indirect will not. Indirect does not become part of the product in the finished end, and it's not someone who's physically working on putting it together for you. So direct will go to work in process. Indirect will go to manufacturing overhead. Okay, so you have to know of all the materials that have been requisitioned, how much is going for direct and how much is going for indirect. So if you look on 9, it says if Wallace uses $24,000 of direct materials and $6,000 of indirect materials for January, then it's going to show that they're pulling the $30,000 out. It doesn't matter if it's direct or indirect, it's coming out of raw materials. And then you segregate it on the debit side. Work in process gets debited for the direct materials. Manufacturing overhead would get debited for the indirect materials. Either way, like I said, it's coming out of the raw materials inventory. So that's how we put it in the process. You'll hear those words from me multiple times. You're going to take these raw materials and put it in the process. When I say we're putting it in the process, you are going to be debiting WIP, okay, for anything direct. Factory labor. You're going to, again, be looking at how do we put the labor in the process. Know for the test that the factory labor is assigned to jobs on the basis of time tickets. So we have the materials requisition slips to assign materials to the work in process account. What we use for the labor side is time tickets, and you'll see an example of that on page 11. It tells you who the employee is, where it needs to go. Work in process would be somebody who's working directly on that product. If it said manufacturing overhead, then that would be an indirect worker. It tells you what job number and then it tells you when they started, when they stopped, how many hours, what's the hourly rate, and what's the total cost. So you have all that information on the time ticket. You take that time ticket then and you decide, okay, how much of this was direct labor and how much of this is indirect labor. And the goal is to use this entire factory labor up. And you're going to put it in WIP or manufacturing overhead, but factory labor at this point has to go to zero, okay, in this entry. So if you look before, when we were putting things in, let me see if they followed it through. Yes. On page 6, when we set up the factory labor for Wallace, we debited factory labor for $32,000. So the goal now is to tell me where that $32,000 was used. Was it used as direct labor or indirect labor? So if you look on page 11, it says, for example, if the $32,000 total factory labor cost consists of $28,000 of direct labor and $4,000 of indirect, then you're going to split it out. The direct would go as a debit into work in process. The indirect would go as a debit to manufacturing overhead. But either way, you're wiping out factory labor. Now, you're not wiping out raw materials inventory when you put that in the process. The factory labor, you do take that to zero. So in the book, it's a debit to work in process for the direct of 28, a debit to manufacturing overhead of 4 for the indirect labor, and a credit of 32 to factory labor, which takes their factory labor that they set up earlier for Wallace to zero. Know for the test that the time ticket information will include things like the employee name, the hours worked, the account that they're working on, and the job to be charged, and their total labor costs. I walked you through that when we first looked at the time ticket. Also know that work in process is debited for direct labor. Manufacturing overhead will be debited for indirect labor. And then again, the credit is factory labor, wiping that account out to zero. So the third cost component for the process is going to be this manufacturing overhead component. Know for the test that manufacturing overhead is assigned to work in process and to specific jobs on an estimated basis through the use of what we call a predetermined overhead rate. So you're going to use an estimate to put it in the process, and then in the end you're going to compare that to what you have said here. That when you're debiting manufacturing overhead, make a note that this is what's been incurred. Okay, so this would be incurred. If I'm debiting manufacturing overhead, it's what's incurred. When I put it into the process, I'm going to credit manufacturing overhead and debit WIP. When I do that, then that is my estimated work or manufacturing overhead, or my applied overhead is what I refer to it as. So you have actual, what really happened, what we really incurred, and when we start using the predetermined rate and we put manufacturing overhead into the work in process account and credit that account manufacturing overhead, that will be applied. That's our estimate. And then in the end, we're going to compare them to see if we're over applied or under applied. But let's talk about the predetermined overhead rate. You're going to divide estimated annual overhead costs. So you're going to take the whole year's overhead costs and divide that by estimated annual production or operating activity. You can see that formula at the bottom of 13. So total annual estimated costs divided by total annual estimated product. And then you're going to get a predetermined rate. Now, this can be done with different, I call them drivers, but they're different ways of measuring, I guess. It's activity based. So you can do it by direct labor dollars, direct labor costs or percentage. You can do it by units. So you're going to have machine hours as far as units go. And that is becoming more and more frequently used as machines tend to take the place of humans on doing the work. So as very often or very frequently, you're going to use machine hours as the driver for that action. So machine hours, labor hours worked, or labor dollars spent, direct labor. So know for the test that those are the kinds of activity-based examples that we're going to be working on, and that the recent trend is that machine hours are used quite frequently because of things being so automated these days. Let's take a look at the example here. It's the middle of page 14. Wallace Company uses direct labor costs as the activity base. So you're going to have to know your direct labor dollars here. Assuming that the company estimates annual overhead to be $280,000 and they expect direct labor costs for the year to be $350,000, you would take the $280,000 divided by the $350,000 and get 0.8. That is 80%. So you would take 80% of your direct labor dollar amount, and that's what you would be applying to the process for manufacturing overhead. So that being said, I'll show you how they calculated it. We just followed through the exercise in the book, and we're going to use the predetermined overhead rate of 80% of, I say, direct labor cost or direct labor dollars. So now you have to look back and say, okay, well, how much was direct labor dollars? Where did we know that? Where did we use that? Flip back to the factory labor entry. So flip back 2 pages. And that was where, on page 11, is where we recorded our factory labor. We know how much we have for direct labor costs. We have work in process being debited for $28,000 there. That's direct labor because it goes to WIP. So we can take 80% of the $28,000. And that will give you $22,400. That is applied overhead, because we are applying overhead to the process at a predetermined rate of 80% of direct labor cost. Okay, and that journal entry then is going to take this much out of manufacturing overhead, the cost component that we set up as a debit when we incur overhead. We would credit that and put it in the process. That's my WIP account. So that's a third cost component now going into that work in process account. Let's take a look at some examples. So back to page 31. Brief exercise 3. In January, Diker Company requisitions raw materials for production as follows. Job number 1 gets $900, job number 2 gets $1,200, and job number 3 gets $700. Then we have general factory use being requisitioned out for $600. If it's general factory use, then it's not going right into the product. The other ones had job numbers assigned to it. That's how you can tell the difference between direct materials and indirect materials. So in that case, we're going to debit work in process for the direct, so all of the ones with job numbers. So 900 plus 1200 plus 700 should give us 2800. That is going to go in the process. Anything I say go in the process, that's WIP. What is it that we're putting in the process? Well, cost component number 1, raw materials. Brief exercise 4 says factory labor information for Diker Company is given in brief exercise 20.2. During January, time tickets show that the factory labor of $6,000 was used as follows. Job number 1 has 2,200, job number 2 has 1,600, job number 3 has 1,400, and general factory use is 800. So when we did brief exercise 2 a little bit ago, we debited factory labor for the total amount of 6,000. So now we're going to take that 6,000 and decide, is it direct or indirect, just like we just did with the raw materials. And in this case, we have direct, those 3 jobs added together of 5,200, which is going directly into the product. That is, again, putting in the process. That's WIP. What are we putting into the process? Well, the factory labor that we set up ahead of time. Oops, hold on. All of it's going into, or coming out of factory labor, and that was 6,000. We know how much is going into the direct product in the end. The difference was those people that were out general factory working, like pushing the broom or servicing the machines. That total came to 800. If it's not direct, it would be indirect. And indirect goes to manufacturing overhead. So now we have officially gotten rid of the 6,000 that we set up earlier, and we can distinguish how much was direct and how much was indirect. Oh, I messed up on the first one. Hold on. 20.3. So this is what happens when you guys aren't in front of me. When you looked at 20.3, you had the 3 jobs totaled up to be 2,800, but you requisitioned out $3,400 worth of inventory. Again, this is direct. Indirect amount would be 600. And indirect always goes to manufacturing overhead. Sorry, we fixed it. Raw materials went into the process. Indirect goes into overhead. Factory labor is completely wiped out from what we set out earlier. Direct goes into the process. Indirect goes into manufacturing overhead. Now, unfortunately, brief exercise 6 does not relate to Diker anymore. They've brought in a new company. Marquee Company estimates the annual manufacturing overhead costs will be $900,000. Estimated annual operating activity bases are, we have direct labor costs, direct labor hours, and machine hours. We're going to calculate the predetermined overhead rate for all 3 of them. Now, will you use all 3 of them? No. Management will decide which one they're going to use, but you need to know how to compute and what it looks like when we compute all 3 of them, because maybe this part of the building will use this as its activity base, this part will use this, and this part will use this. So you may have 3 different areas using the 3 different predetermined rates. But anyway, you want to know how to calculate all of them and what they're all going to look like. So brief exercise 26. All right, so either way, we are looking at 900,000 is our overhead cost. We're going to first of all, calculate direct labor cost. We just did that one with the company, Wallace Company, in the books. Our estimated overhead is $900,000. We're going to divide that by, in this case, direct labor dollars, which was given to us at 500,000. When you have a dollar over a dollar, that will give you a percent. Okay, that will be 180%. Direct labor hours. Same thing, you're going to start with the 900,000, but taking a look at how many direct labor hours were worked. In this case, we have 50,000 hours. You have a dollar amount over an hour, so you have a dollar amount per hour. And in this case, it's 18. Then you have machine hours. Again, we're starting again with the 900,000. And we have 100,000 hours on the machine. You are dealing again with a dollar amount over an hour, so it's a dollar per hour, and it is going to be 9. What that gives you then is the dollar amount that you will be multiplying by these things to get the third cost component in the process. With this first one, if you're using direct labor costs, then you're going to do 180% of what your direct labor dollars are. So you have to go back to the factory labor entry like we did in the book for Wallace, grab that WIP account there that has been debited for factory labor and multiply it by 180%. In this one, you would have to know how many direct labor hours were worked. You would take those number of hours times the 18, and that's what you would debit WIP and credit manufacturing overhead for. In this one, you would take the $9 per machine hour that actually happened. So this is actual direct labor dollars being multiplied by 180%, actual direct labor hours multiplied by the $18 per hour, and actual machine hours multiplied by the $9. Either way, the debit is to work in process, the credit is to manufacturing overhead. All right, once we get a job done, then we will complete the job cost sheet, and then that area down at the bottom will give us a total for our entire product. So you can see a completed job cost sheet on page 17. This is for job number 101. And we have direct materials totaled down to be $12,000, direct labor to be $15,000, and overhead to be $12,000. When you add those up, you come up with $39,000 for our total cost. Then you have to know how many units were produced. If you look at the top right, it tells you we had 1,000 quantity in this job. Divide that out, and you have $39 per unit. So what you would do then is you're going to take the total costs. Okay, so because remember, inventory is always done at cost. It's an asset, just like your equipment and vehicles and building and all that is always, assets are always recorded at cost. Well, how much did this cost me to make these 1,000 units? It cost me $39,000. Right now, all of those costs is sitting in that WIP account. When you put the direct materials into this process, we debited WIP. When you put the direct labor in, we debited WIP. When we applied the overhead, we debited WIP. That's what all of this is. So the cost of this finished job is sitting in WIP. It went from raw materials, factory labor, manufacturing overhead, into the work in process. Now what we have to do is we have to take it at cost price out of the WIP account and put it into finished goods. And that's the journal entry that you're going to see there on 17, page 17. You're going to debit finished goods for the $39,000 cost, take it out of the work in process account for the $39,000 that it cost you to do. From there, then, it becomes a sold good when it's sold. And at that point, again, like I said earlier, you will have two journal entries, one at the selling price, one at the cost price. So if you look at the bottom of 17, it says that Wallace is going to sell this job for $50,000. Well, we know how much the job cost us. The job cost us $39,000. We're going to sell it for $50,000. So if you flip to page 18, you'll see the two journal entries. The first one is we're going to always sell it on account. Accounts receivables is my debit, and this is at the selling price. Sales would be my credit, just like it was when we were a merchandiser. Cost of goods sold at the cost price of $39,000 and debit finished goods at $39,000. So now that we have seen this entire thing go all the way through the process, from pieces, parts, to in the process, to finished goods, to now I'm a sold good and I've gotten part of cost of goods sold. You can see the summary of the job order cost flows there on page 18. You have the three cost components: inventory, labor, and manufacturing overhead. Those three cost components become part of work in process. When the job is complete, it comes out of that work in process, goes into finished goods. When it becomes a sold good, then it goes out of finished goods and becomes part of cost of goods sold. So there's the flow like we talked about. We're not really going to, you can read the section on service companies, but we're really not going to focus on that. We're going to focus on companies that are actually producing a product. So you can look that over if you want to. Let's talk, I briefly mentioned that we were going to apply the overhead and have applied overhead and actual overhead. And we need to know how we're going to handle that. At some point, you have to take a look at that and say, okay, well, in the end, are we over applied or under applied? And what do we do with it? So under applied overhead, no for the test, means that the overhead that was assigned to the work in process is less than the overhead that we actually incurred. Okay, so we have got actual, that's what is true, what we really had, what's incurred. When we got that, we debited. Whoops. Manufacturing overhead. Applied overhead is that estimate. So that's our predetermined overhead rate. That will be your credit to manufacturing overhead. So what you've got is you've got this T account for manufacturing overhead. When you incur it, that goes here. That's your actual. When you apply it, that goes here. If my applied ends up being more than my actual, then I am over applied. If my actual becomes more in the end than what I applied to the process, then I am under applied. Okay, so know for the test that if I am under applied, that means I did not put enough in the process. I didn't estimate enough compared to what we really and truly had. That would make me under applied because my actual amount was more than what I put into the process. Also understand what it means when I say over applied. If I am over applied, that means that I have used too much with my predetermined overhead rate and put too much in there compared to what we actually had. Now, this part is not in your book. It was in older books, but just to give you the in-between or the interim balances when it comes to manufacturing overhead. Under applied overhead will be shown as a prepaid expense in the current assets section of the balance sheet. Over applied will be shown as an unearned revenue in the current liability section. So throughout the year, not the final, but throughout the year. So like if it's a calendar year, January through November, those are interim balances. If you end up with the end of the month with over applied manufacturing overhead, that would be an unearned revenue or a liability on your balance sheet. Under applied would be shown as a prepaid expense. Do know for the test, and it is in your book, the year-end balance, what happens at the end of December. Any balance in manufacturing overhead is eliminated with an adjusting entry, and the offsetting account is cost of goods sold. So whether your balance is here or here, in the end, manufacturing overhead will be closed out to zero. So you will adjust it to zero with cost of goods sold. However it is you need to fix that account to make it go to zero. Cost of goods sold is the other account. Let's go, let me see what number 10 is. It's just a brief exercise 10 on page 31 is just how do I get rid of this manufacturing overhead account balance at the end. It says at December 31st balances in manufacturing overhead is a debit of $1,200 for this first company. So we would have a debit here of $1,200. We would need to make that go away. So we would credit manufacturing overhead, debit cost of goods sold. The second part of 10 says, okay, well, if we don't have a debit, Garcia Company has a credit of $900. And this one is Shamika. So Shamika Company had a debit balance of $1,200. We got rid of it by crediting manufacturing overhead, debiting cost of goods sold. Garcia, though, has a credit balance in manufacturing overhead, so I would have to debit manufacturing overhead and credit cost of goods sold. So again, you're looking at this account and then using cost of goods sold as the other side, making your debits and credits equal. So that is chapter 20. You will have your video, then you will have the paperwork assigned also. So your group work, your homework for points, your extra review, those will all be released at the same time as the video on Moodle. We will test on chapter 20 and then we will do chapter 21 separately. So have fun and let me know if you have any questions. See ya.